So a stop run is just an liquidity sweep, right? But we just need to use it wisely, okay? We don't really go to the charts and mark this as a liquidity sweep and really look for a setup here. We just combine everything, okay? Stop run into a key level. This is very effective in the markets if you just blend it with the top-down analysis and blitz model, okay? So I'm gonna just show you a lot of example here, okay? So what is a stop hunt? Here you can see it took the high here, right? Exactly, this high. So, and this, it is a liquidity sweep, right? You gotta pair it up with the key level, okay? So if I just go to the lower time frame, like look at this. We got an FEG here, right? A low resistance liquidity. Look at these lows, relative equal lows, okay? Low resistance, and we got this FEG, right? And yes, discounted FEG. Premium was a discounted range, right? So this price is trading the premium. And yes, there is a 4-hour FEG here, right? So if I just go to the M15, okay, you can clearly see that it has stop limit, right? Yes, it is very minute. Like, look at this. This is very minute here, but it is a stop limit, okay? There was an SMT here. So after the change in the state of delivery, okay, so we got this 4-hour FEG here, right? 4-hour FEG internal to external. This is the external range liquidity, right? So after this external range, we got this 4-hour FEG here and discounted price, right? Now, look at this price action. Midnight opening price, right? It just accumulated above the midnight opening price. Yeah, just look at this. Accumulated above the midnight opening price, got the distribution market maker sell model. Okay, so if I just go to the M15 FEG here, give me a second. Yeah, M15 FEG here. This is the key level, right? So intermediate term perspective key level. Okay. And if I just go to the M5, M3, or M1, we can clearly find the stop hunt into the key level. Okay, so I'm on the M5 time frame, right? Look at this. We got a stop hunt here. Yes, change in the state of delivery here. Okay, so I would say this. Okay, so if we have SMT at the highs, then yes, it will be valid because this is our close candles here, right? And yes, we have a massive dump here to the lows. Right, so let's look into another example here. Okay, so if I just go to the H1, yeah, so let's look at the top-down analysis with the continuation purges. Okay, so all we need is the internal range liquidity or external range liquidity, right? Everyone knows that internal range liquidity to the external range liquidity. Okay, you don't need to complicate anything. Credits goes to the MMX Infrater for revealing this concept with ease. Okay, so if I just go to the H1, okay, it's daily FEG, key level, right? So what is the intermediate term perspective for the daily? It is the H1. Okay. If I go to the H1, will you see a stop hunt? Yes, this is a range high. Okay. But we need a H1 FVG or a H1 stop hunt. Okay. Yeah, this is the H1 stop hunt, but this is a reversal, right? So we need for the continuation sequence here. And we got an hourly FVG here, right? So we got the stop, sorry, FVG here. And if we just go to the 5 minutes, that will be our short-term perspective, right? Daily as in long-term perspective, H1 as an intermediate-term perspective, and M5 as in short-term perspective. Okay. And I just need to look for SMT. Okay. So opening price, key level, SMT. Yeah, stop hunt, SMT. And then change in the state after the order block. Again, credits to the MMXM. So I'm an M5 chart here, right? So this is why you don't trade it as a pattern. If you look at the market with a pattern, let's say an accumulation overall accumulation phase, and what is this? 930 manipulation. Since it's the Nasdaq here, right? Even the Nasdaq, everyone thinks that this is the manipulation. Of course it is. Okay, but this is just a discounted premium retracement. Right? We got a whole context here. We got the order flow. We got the high time frame key level, and now we got the H1 FPG. Of course, that was SMT because I took the straight line. So we got a stop hunt here. So we got a daily FEG into an H1 FEG to the intermediate term perspective. And then we got the M5 stop hunt here. Stop run into the key level, right? So range high. So this is very effective. Okay, this is very high probable if you just stick with it. Okay, let me just go to the gold and explain you my. So we got another example here on the gold. Okay, so I'm just gonna mark out the key levels. Okay, and yes, premium was a discount here, right? So of course we had S&T at the highs with silver, right? Change in the state of delivery order block here, right? So if you just look at this, okay, just look at this. We got this daily FEG here too. Guess time there's a discount. Price always goes to a premium from a discount, okay? From discount to premium and premium to discount. It does that every time, okay? And that's why you just need to long at the discount and short at the premium, okay? So just look at this. We got daily FEG here, right? Ignore this bullshit price action. Got this daily FEG here. And yes, there was this SMT at this time, okay? I think it was at the H4 or whatever. Okay, so yes, we got SMT. I can confirm that. Okay. So it took the previous day low, right? Remember the Twitter model from MMX and Trader. If it takes out the previous day low or a previous day high, we just go to the H1 time frame and map up the H1 FEG, premium FEG, and we just target. All right. So what is a intermediate term perspective here for the day? It is H1, right? So I gotta go to the H1 now. I'll tell you that how you can just combine the blitz model with this. Okay, the distribution candles on the H4. Probably I'll post a video later on the daily candle distribution. Okay. Let me know what type of contents you need regarding the chart. Okay. Yes. So if I just go to the H1, I can clearly see that it took the previous day low here, right? And yes, we have this daily FEG2 here. Okay, and a lot of low resistance liquidity. And yes, premium fair value gap, right? This is the target. All right. So did it create the H1 FEG or H1 stop point here? Yes, H1 FEG. Okay. So we just need to look for an S&T at this key level, right? Yes, we got the S&T. So if I just go to the M15, silver took this low, 3:15 a.m., and we had an S&P here. Okay. Yes, this is not on the relevant low here, but if I just go to the low time frame, M5, it'll be okay. Yes, this is considered as an SMT2. It indicates the strongness of the gold, okay? And we have a stop run here. Stop run into a key level, right? Stop run, 15-minute stop run. And if you just look at this, we have a double purge, right? We have a double purge here. Remember the double purge from MX and Trader? It always runs the highs with ease, with low resistance liquidity. And yes, we got the stop run into a key level here with the LTP aligned ITP key level. All we just need to go to the lower time frame and look for an entry model. So you can use whatever the entry model you prefer. Okay, I prefer the double purge with order blocks and FEGs, whatever. But I just really wait for the proper context. Okay. Yes, if you look at this, we have FEG here, right? And the change in the state of delivery. It is very clear, right? This is A plus plus setup. Everything is perfect here. Okay. We just need to confirm that if this is a 4-hour distribution candle. So you need to just read the charts here on the M file. And now I'm on the M5 chart here, right? You need to read the charts with the time frame perspective. Okay. We just need to mark up the times. So since it's gold, we got the 2 a.m. candle, right? London session candle, 2 a.m. just opened up. Sell stops, SMT, change in the state of the and made the reversal here, expansion, right? Accumulation, manipulation, distribution. We got a lot of liquidity here, low resistance, and we got a premium FEG. And yes, now we got this H1 FEG and then 15 stock fund. And this is a 6 a.m. candle, which is a new 4-hour candle. Now we got the opening price of the new 4-hour candle. Okay, just look at this. This is the candle number 1, right? Remember the candle closures from MMX and candle number 1, candle number 2, and now we expect this candle to be the distribution until 10 a.m. Okay, this is the distribution time window, and this is the distribution candle. Okay, all you just need this opening price, key level, S&P change in the state of delivery, with the higher time frame perspective. Okay, and yes, top-down analysis. You just need that. Okay, it's very easy to trade if you have that alignment. I change in the state after delivery. Just frame this trade. Okay, I don't really say that this repeats every time or you know it happens too often. No, it won't. It'll be very specific. Okay, you're gonna blend it everything. It's literally, let's say, if you have a clear price action, it will present you this. Okay, and if you just miss the trade or you don't get a trade, you don't simply trade it. Okay, you don't go to the charts and really think like, okay, I'm gonna trade this. No, you never do that. That's the only thing you do again and again to blow your accounts or whatever. Or change the strategy. Just stick with this 1 to 2 or 1 to 3. You just need a data on this. Let's say, just go to the charts here, okay? So if I just go to the, let's say, okay, I just got a 4-hour view here, right? It took the sell stop, candle number 1, candle number 2, and candle number 3, right? What this candle has: open low, high close. Remember the Twitter model and every alignment we just really combined here. That's it. That made the distribution here. And in the lower time frame, you just make sure that you have entry model, double closure, whatever it is, okay? And yeah, this is a stopper into a key level, which is very high probable. I recommend you to backtest and reverse engineer this, okay? And you will find a lot of success. And please let me know that what type of struggle or what struggle you have on the charts, okay? I will just really try to post a lot of videos for you guys. Thank you. See you later.